What's going on, guys? This is Andy. Welcome to the Andy Kandola Show. So today we got a lot to go over. I'm going to go ahead and share with you guys how I go about researching new stocks and finding the best companies. Along with that, I do want to share an update as far as where my portfolio is currently sitting at. We've had some decent days in the market, so my portfolio overall is up. And then additionally, what's going on in the news? There are a couple things that are going on in the news right now that I do want to share with you guys as well. So let's go ahead and just jump right into it. Now, the first thing I wanted to share with you guys is why the market's been going up. Now, just in the last week, the market has gone up 900 points. And one of the biggest things that actually came out was that Moderna, who is actually one of the few companies, and they're actually one of the two companies that are doing human trials on this vaccine. And they actually reported positive data. So they had 45 participants that they were testing this on. And based on the 45 participants, every participant did see improvements. They did do different doses on each participant, but as far as the overall data goes, it did show positive results. So obviously, based on the vaccine coming out sooner than later, the market is putting that in perspective at this point. So the Dow Jones did jump pretty big in the last couple days here. Now, that is one of the major news that came out over this past weekend. And additionally, if we just go ahead and look at their stock, Moderna's stock just in the last day is up over 20%. And the other company that is also doing human trials for this vaccine is actually Anivia. Anivia Holdings is the second company, and their stock is actually up over 5% as well. And basically, that's a really good thing that we are getting closer to getting a cure for this current virus that's going around. And both of these companies could be a good long-term investment. Now, the second thing that I wanted to share that I thought was kind of a bigger news here as well is Warren Buffett decided to make some changes with his portfolio. Now, Warren Buffett, through his company Berkshire Hathaway, sold majority of his stake in Goldman Sachs. Now, Goldman Sachs is a company that he has actually been investing in since 2008, and he actually decided to sell majority of his shares in Goldman Sachs. So as it shows here, he sold 84% of his stake in Goldman Sachs. Plus, he did actually reduce his stake in Wells Fargo as well, but it wasn't by that much. So this was big news because Warren Buffett, obviously the guru of investing here, decided to sell a stake in Goldman Sachs, but he is still pretty heavily invested in the financial sector. So that does tell me that overall, I don't see the financial sector really going anywhere. But in general, him selling out of Goldman Sachs just shows me that he is being conservative because he doesn't know where the future is going to lie. But just to share with you guys, Warren Buffett still does have a huge financial stake in American Express, Bank of America, PNC Financial, and Wells Fargo. So he's not totally getting rid of financials in his portfolio. He's just reducing the risk in his portfolio. Now let's go ahead and jump into my portfolio at this point. And as far as my portfolio goes, currently my portfolio that is really focused around dividend stocks is sitting at $19,710 at this point. And additionally, if we just look at the gains overall for the year, I am in the positive at this point. So that's a nice sign. I'm $579 in the positive, or 5% return in the positive. And additionally, if we just look at the last week here and the last day, I'm up $774 in the last day because the market has been going up, so it's a really good sign. And additionally, if we just look at the last week, for the last week I'm up $268, and the last month I'm up $545. Now, if you do want to find out a little bit more information as far as what I have in my portfolio, I do have a link down in the description with my full portfolio and all the stocks that I currently have in there. Now, I do have my portfolio split up into the different market sectors. And basically, there's 11 sectors in the market, and my portfolio is split up within all those sectors. Now, I'm not going to run through my portfolio, but I do want to share with you guys some of the buys and sells for today. Now, recently, I am looking to sell my position in two companies, which is going to be PPL Corporation and Cisco Systems. And then I am adding on to shares of PBA, which is Pembina Pipeline Corporation. They're basically one of the biggest pipeline corporations for oil and gas supplies. And then additionally, I am just raising my stakes in some of the other utility sector companies that I personally like, which is AQN, Southern Company, Once again, PVA is there. Also NextEra Energy. And another stock that I just recently added to my portfolio is NVIDIA. Now NVIDIA is a game processing company. They basically make processors for PCs, and they have a very popular processor which is called GeForce. Additionally, I am investing more in Microsoft. So guys, these are going to be some of the stocks that I'm currently purchasing, and this is just an update on my overall portfolio. Now let's go ahead and jump into as far as how I like to do research and what I do as far as when I evaluate a stock. And I'll share with you guys a couple examples as well so you understand exactly how I evaluate a different stock. But the first thing that I like to do is when I'm searching for companies, I first like to have a plan as far as what type of company or what is my objective or my strategy. Now, first and foremost, it is important to have a strategy in place and set some rules around your strategy. Now, in my case, I focus on safe dividend stocks that are paying out at least a 2% dividend because my goal is to build additional passive income. So there's going to be a couple different resources that I personally like to use. Now the first resource is I do research my stocks in M1 Finance. Now as far as using M1 Finance, I'm going to go ahead and show you guys how I go about doing research in M1 Finance, and then some external websites that I personally really like that give you a lot of good data. So now in my case, because I focus on dividend stocks but that actually also show growth potential, the first thing that I do is go to research and then I look for stocks. Now within these stocks, if I look here, these are going to be the companies that have the largest market cap, and basically with some of these stocks they do have a dividend yield as well. Now the nice thing is I can use the different filters here, and like I said, my goal is 2% on the lowest as far as dividends go. So I am putting in 2% here. And once I do that, it automatically shows me stocks that are paying at least a 2% dividend yield. So now just jumping into one of these stocks, let's go ahead and just maybe choose one of these stocks to jump into. And some of these stocks I actually do have in my portfolio. So these are actually very strong companies because these are huge, large corporations that are established at this point and that are paying out a dividend, and their dividend is usually much safer. But let's go ahead and jump into one of the ones that I basically think every portfolio should have in there because this is a huge growth company to me, but it is going to be Johnson & Johnson. Now, once I am reviewing a stock like Johnson & Johnson, a couple things that I'm looking at. The dividend yield I am looking at, which is at 2.68%, so it is meeting my guidelines as far as having at least 2% dividend yield. Additionally, I want to go ahead and look at the stock price for this particular stock and how the price of the stock, is it growing, is it decreasing, is it increasing, what does the charts look like over time. And usually what I like to do is look at the 5-year trend and the 1-year trend. But if we look at the 5-year trend, the stock seems to be consistently growing, and over the last 5 years the stock has grown by 44%. So that's a positive sign, especially being that we are in this pandemic. The overall stock market has decreased a lot, but with a stock like this that's actually been increasing even though the whole stock market has been down after the pandemic, that's a solid sign. Additionally, I'll look at the 1 year as well, and just at the 1 year level we can see this is where the stock market basically crashed and took a huge dive, but this stock has rebounded and now it's up actually over 8%. Additionally, what I like to do is make sure that I understand the company. Now, in the case of Johnson & Johnson, this is the world's largest healthcare company, and I'm sure we all use one of their products. And if you're not familiar with some of their products, you can definitely visit their website here as well and get more familiar with Johnson & Johnson. But basically, Johnson & Johnson, I'm not going to really run through their website, but as a long-term stock in the healthcare sector, this is a really solid stock. Now, additionally, I do like to look at the PE ratio, which is the price to earnings ratio. And basically, ideally, what I'm looking for is a PE ratio between 10 to 20%, meaning that the stock is really not overvalued and it's at a good price right now. Because the PE ratio on this is 23.5%, the stock is a little overvalued at this point, but as a long-term strategy, this still fits perfectly fine with my investing strategy. So now the next thing that I like to look at is I like to look at their dividend dividend growth rate. And the site that I personally really like using is Seeking Alpha. Now, once you're in Seeking Alpha, if you just type in the stock, you can actually go down and find a lot of great information as far as what the stock has to offer. But now just going into the dividends for the stock, there's a couple different things that I'm going to be looking for here. But with Johnson & Johnson, look at their dividend growth here. This to me is very important, guys. This stock is actually considered a dividend king. Now, if you are not familiar with what dividend kings are and dividend aristocrats, highly recommend do your research on what dividend kings and dividend aristocrats are. But basically, a dividend king is a stock that has been growing their dividend and has been paying their dividend for at least 50 years. And a stock that's a dividend aristocrat is a stock that has been growing their dividend for the last 25 years. So for this company, this is an extremely good company from a dividend growth perspective because they've been growing their dividends for the last 57 years. So now the next thing that I also look for is the 5-year growth rate. Now, ideally, I like to see a growth rate of at least 4%. But this stock does have an average growth rate of 6.32%, so that does meet my guidelines as well. Additionally, what I'm going to be looking at is the payout ratio, and the payout ratio of 52% is good. What I like to see is something around 60% or lower, basically something between the 40 to 60% payout ratio. And what that basically means is based on their net earnings, this company is paying out 52% of its earnings in dividends. And if we just look at what their dividend yield is, that's basically a 2.68% or $4.04 per share based on the current price of $150 per share. So those are definitely some of the most important things that I look for when it comes down to the dividends of a stock. And additionally, I do like to look at the dividend growth as well. So when I just click on the dividend growth here, this is going to show me their 1 year, 3 year, 5 year, 10-year dividend growth. But the thing that I actually look for is this chart right here. This chart shows their dividend growth year over year, and this is exactly what I'm looking for. I'm looking for the dividend to grow year over year. So this chart does a good job at showing us what the dividend growth is for this company. So now the other thing that I also look for is I want to go ahead and understand the financials of a company. Now here's the thing. The way I look at this is I'm investing in this particular company and I'm putting my money in this business. So to understand the business, you always want to make sure that you understand exactly what the business does, but also, is the business making money? Is it losing money? What's going on with their financials? So guys, look at it like if you were to go ahead and invest in your own business. In this case, you're investing in somebody's business. You want to make sure that this company is actually earning money, and you want to see what's their net earnings at the end of the day. If the business model is growing, that's a positive sign. The business is making more revenue. But if the business is not growing and it's declining, that's not a good sign. So is it a company that you want to look at and you want to put in your portfolio that's just not going to be growing? So that is very important to me, is to look at some of the financials of the company. Now, just jumping into the financials, there's going to be a couple things that I look for. But one of the things that I look at is the total revenues of the company. Now, the total revenues, I do want to see them growing over the last 5 years. Now, if I look at this, the total revenues for Johnson & Johnson, 2016 at $70 billion, 2017 at $71 billion, and as we can tell here, 76 billion, 81 billion, and 82 billion. So this company's revenue has been increasing every single year. That is a very positive sign. That tells me that this company is growing. Now, additionally, the second thing that I like to look at is their net income, because a company can have increasing revenues, but what if they're not making money? At the end of the day, it's the net income, which is after all your expenses and your operating costs are paid for, that's how much money you're taking home at the end of the day. So the net income for this company, what I'm basically looking for is a steady net income. And ideally, if the net income is growing, that's a positive sign. But even if it's steady net income, that's a good sign as well. What that could basically means is the company is growing in revenues, but they might be reinvesting some of those revenues into new drugs or into other technologies and that sort of thing. So the net income that I'm looking for here is right here. And basically, if we look at the net income for Johnson & Johnson, 2016 at 15 billion, then 16 billion, then 1 billion. And this could be because the company actually took over another company, or I'm not actually sure why it shows 1 billion here, but it does show me here that they had income tax expenses of 16 billion. So this is something that I'd probably want to find out a little bit more information on. At first glance though, it did look like a glitch, but it could be because the company took over another acquisition or that sort of thing. So the company did end up spending money. And then the following year in 2018, it was 15 billion. And then 2019 was 15 billion. But as we can look here, guys, in general, it shows that the company does have steady net income. So that's a very solid sign as well. So those are just some of the things that I look for when I'm looking at the financials of the company. So now the other thing that I really like about Seeking Alpha is that if you want to go ahead and track a stock, or you want to go ahead and find out if a stock is going to stop paying their dividends, or find out any kind of news in regards to a stock, you can actually go ahead and create your own portfolio. And within this portfolio, it's totally free. And basically you can go ahead and set up alerts. So you'll get alerted every time a stock makes any kind of news headlines, or if they decide to cut their dividends, or if they decide to go ahead and increase their dividends. So I do have my full bucket list portfolio in here as well. And if I just click on view guidelines or view headlines, it will go ahead and show me some of the latest news as far as what's going on with a particular stock. And one of the things that I just want to show you guys here is that, for example, I have Home Depot in my portfolio, but this right here is an actual alert that's actually telling me that Home Depot just declared their dividends. And if we look here, Home Depot declared their dividends at $1.50 per share, which was in line with their previous dividends. So this is extremely nice, because if you are focused on dividend investing, every time a stock declares a dividend, a stock cuts a dividend, or increases a dividend, you'll actually get notified. So that's extremely helpful when the focus and the strategy is for stocks that are dividend focused. But I personally really do like Seeking Alpha, so it's a nice way to go ahead and track your stock. Plus you can go ahead and sort by the holdings, you can go ahead and sort by the earnings, the dividends, and look at stocks that are paying the highest dividends, the lowest dividends. So there's a lot of useful information that Seeking Alpha does provide for free. Now additionally, there's going to be one other resource that I personally really like to use that makes sure that the stock is in line with my strategy for dividend investing. And the website is going to be called Simply Safe Dividends. Now within Simply Safe Dividends, the nice thing with this website is that you can go ahead and see your dividend growth. You can go ahead and see dividend safety for each particular stock that you have. Plus you can go ahead and track your annual income in this. Now you do have to add all your holdings to this, and currently it shows that I have 60 holdings. But once you go ahead and add your holdings into it, you can go ahead and track all your investments. So in the case of Johnson & Johnson, if I just pull that up here in Simply Safe Dividends, but just so you guys are aware, this site does cost money. They do give you a free trial in the beginning, but after the free trial ends, I believe it's $399. Now here, if we look at Johnson & Johnson, the dividend safety rating on the stock is very safe, meaning that the dividend should not be going anywhere anytime soon. And basically anything above an 80 is considered very safe. So in this case, this stock is considered very safe. The other thing that I look for is the dividend growth. Now the dividend growth for this stock is at 6%, so it is an average dividend growth as opposed to some of the other stocks within this market sector and within the healthcare sector. And additionally, as we've seen on Seeking Alpha, the dividend growth rate is 57 years, meaning the stock has been growing for the last 57 years. So this is the last resource that I personally really like to use. But now let's go ahead and go back into my portfolio. So guys, that is basically how I go ahead and look at investing in stocks, and basically the websites and what I look for when I'm researching a stock that fits within my portfolio. So guys, if you are new to investing and if you want to go ahead and invest with M1 Finance, I do have an affiliate link down in the description. If you do sign up for that, you do get $10 free to set up your account with them. Now, if you do have any questions that you want me to answer, go ahead and leave me a comment down in the description below. So hopefully you guys found this helpful, and basically this is how I look at doing all my research on my company. And if you did, guys, if you don't mind hitting that like button for me, as it really does help keep me motivated to keep putting more videos out like this. But that is gonna be a wrap for this video, guys. Thank you again for joining me, fam. I will see you guys at the next one.